Hello everybody, welcome back. Let's have a look at the charts. Starting off with Bitcoin after yesterday's CPI. So we were talking about the CPI coming through, giving a lower than expected read. That's exactly what happened, and so as a result we've got a pump and then a dump and then a pump, which is more or less exactly what I was expecting. So we got that then. If we would forget about the dump after the pump, and again it's only took like an hour to recover, we'll measure it from before CPI to where we are right now. We managed to get a 2.75% move. It's not massive, but it is what it is. The thing about that small move though, because it is a move to the up, so we got a move up as expected, but because it was so sort of weak, we're looking for it to get rejected on the first major resistance, which to me is going to be between the 200 simple and exponential on the 4 hourly over here. So we got 58,700 to 59,100. We move over to the daily as well. We are already getting rejected on the 20 moving average as well. So there is a chance that we've already seen the top on this one. But we'll see. We'll check momentum in a minute. If there is a move further, we've got incoming death crosses, but it's not a death cross until it happens, which is just almost just a little bit above where we were saying on the 4 hourly, which is 59,250. So these are the areas to look for today for any kind of break. Would be bullish. Obviously, any kind of rejection is kind of what you'd expect. Always expect a resistance to reject you. There's nothing more simple than that. It's just basic trading discipline, really. So that's all we're looking for. So let's check momentum, see if there's anything fading. Money flow index is, I wouldn't say fading, it's cooling off. So that's not your average bearish divergence. This is basically just cooling off. It could easily turn up and shoot out. There is a trend line here that you could see, which has already been broken. So I'd be looking for this to turn up with another push to the upside. So I think it's very likely that we do see 59,000 today. But if we see anything higher than that, I'd kind of be surprised, pleasantly surprised, but surprised all the same. So let's have a look at the shortest term time frame stuff, because again, it's all about today, I'd say. The hourly does have bearish divergence on the hourly. That could easily get broken, but at the moment it is bearish divergence, so it complements the idea of rejection around those areas, probably around here, basically. So that is basically all there is to know about Bitcoin. So the pump after the CPI is still playing out. It's not very strong, but it is still playing out. Yeah, CPI had the desired effect. So let's have a look at the broader markets. We'll start with US 500 pre-market to futures, and look, it's basically behaving the same way we kind of expected it. This is a symmetrical triangle. You could call it a rising wedge. You could call it whatever you want, but we've got support and resistance either way. So we managed to, we're looking at this on a weekly time frame. We managed to get support on your 21 exponential on the weekly, with probably a view to maybe even come back up to the top of the range here, 5,650. We could see that, could even see that today. It'd be a big move. We've got bearish divergence, we've got hidden bullish divergence. So as far as the weekly is concerned, I'd probably say it's in favor of bulls at the moment, but overall, my long-term analysis on S&P is one of a downtrend, unfortunately. But for the moment, with the price action still in the in bull's favor on the weekly. Now the daily, I'll have to zoom in a little closer so we can all see it a bit better. But just like Bitcoin getting rejected so far on the 20 moving average on the daily, so Bitcoin and S&P are both at exactly the same place on their charts. They're exactly the same, no difference. So the correlation, you could say, is going to be identical to the reaction, but it's also just technicals on both charts. So I wouldn't really look at this and say this is going to break. It's more likely to get rejected, and if you get a support, it'll be from some of these lower moving averages. Hopefully get a higher low, but the simple Bollinger Band strategy, and again, this is the opposite of the weekly. The weekly is suggesting bullish, but the daily is suggesting bearish. The simple strategy is 65% more likely to remain in the portion of the band that you're in, and at the moment we're in the lower portion of the band, which means that on the daily, for instance, a rejection from here is most likely to come down. But again, if you move that over to a weekly, it's the opposite of that. So the higher term time frames are still bullish while you're above 5,400, but on the daily you're technically bearish while being below more or less this exact area, 5,565. So it's a battle of the time frames. I suppose the only other way that you can try and get some kind of heads up would be to look over onto the 4 hourly. And the 4 hourly is showing lots of hidden bearish divergence moving up. Again, this is just the pre-market. This isn't SPX. This is not the real S&P, but it's the pre-market, which I find most useful because it's got more price action than S&P generally. But we are above moving averages, but we've got a lot of hidden bearish divergence. So with that, I would say, yeah, a pullback on the 4 hourly is perfectly acceptable. Hopefully you get supported and picked up around 5,488. If you lose that area, then we just continue with the lower high, lower low structure all the way back down to that 21 exponential moving average, which again, just for reference, is 5,400, that kind of area. And if you lose that, it's the bottom of the range. And then once you lost that, then we do sort of breakdowns. This is a formation trade. You know, you can get bullish with the break of the formation to the up, bearish formation breakdown. So it's, you know, at the moment we're playing within a range. There's nothing more than that. Right, let's have a look at the total 2, which again is no different. The hopium, it still kicks in while being supported on the 200 exponential on the weekly. So it's a golden cross retest. That's technically bullish with a hope and a view to have a V-shaped recovery and then some. That goes hand in hand with the idea of the log scale chart that we've had on here since forever now, which is that this should resolve to the upside between the end of this year and into next year. This is the sort of vibe we're looking for. Not price exactly. We're not going to say we're going to be at $4.8 trillion market cap. We're just saying that this is the projection of the chart generally. And yeah, a support on that 200 exponent on the 200 simple moving averages. Well, it's an appropriate place to get that from, really. So maybe the low is in, maybe it's not. The total 2 is not the dominant player here. It's just a reference point. In a healthy market, you'd look at that and go, all right, yeah, I'll have a bit of that. But it's not a healthy market at the moment. Everything's so turbulent with everything that's going on. Rate hikes, rate cuts, nobody knows. You've got geopolitics globally. Everything's kicking off. You've got elections coming up with, I suppose, very different views on how they're going to use the crypto market, whether they're going to be for it or against it. So there's so much hanging in the balance, not just with crypto, but for all markets, really. Lots of different policies that are, I suppose, polar opposites of each other that could really impact all of the financial markets globally. And if you think about what crypto is, it's just like a grain of sand, really, on a beach of financial markets. It's not really anything. It could easily get washed away with a bigger tide that comes for something like the S&P, NASDAQ, or even Forex like Dixie. So there's a lot going on outside of these charts. We can look at them and go, yeah, we can get a handle on them to an extent, but there is a chance that, you know, a big tidal wave can come and just wash them all out, really. And that's my fear, really. So while being in a formation, you can try and trade that. If you really wanted to see the bigger move, you would wait for the formation to end, whether that's for the bulls or for the bears. But personally, just focusing on Bitcoin, which is what we're all about, and then thinking about what crypto will do as a result of that. I'm looking for a move up to get rejected around the lower 59,000s, and if we do get an extension beyond that, then it would probably be quite bullish for a longer, larger move, maybe even into the 60s, you know, the upper mid 60s, probably 68,600 would be my absolute top target on any move that we're seeing brew at the moment. But look, just wind our necks back in. S&P and Bitcoin currently just touching the center of the band, which allows for a 65% chance of a rejection. So I think if we do move up ever so slightly, it'll just be a wick, and we'll close the day lower than this. If you close the day above that 20 for S&P and for Bitcoin, then we should see continuation to the next areas, which is not massive at the moment. You know, you've got to take it step by step. Let's just finish by recognizing that we're still in that consolidation structure. The one that I said is likely to continue throughout the entire summer. Started in March, still going on now. So, you know, the larger, sort of higher term time frame analysis that I said since December last year is still in play. We can see it in front of our face. That is still going on. So just remember that and respect that. Consolidations end, and if you look at this formation, it's a clear consolidation. It's actually very neat and tidy. From wick to wick, it's actually hitting very nicely. And this, again, just like anything else, is a formation that requires a breakout trade. Whether you break out to the up, you're bullish until new all-time highs. If you break down from here, the targets are actually quite a lot lower. So look, allow it to consolidate. It's not doing anything that we haven't expected. We've been talking about it since December. We talked about it every other day since December. We're still seeing it now. The analysis that I provided back then is still absolutely 100% appropriate. So we can and ah about all the other things outside of the chart, which is fair to do, but also recognise that exactly what we said was going to happen is still happening. So allow it to happen, because it shouldn't be any surprise to any of us, because this is exactly what we expected. Right, that's it. I'll leave it with you there. If you want to join the Telegram, links in the description. Patreon as well, links in the description. Other than that, hope you have a nice day. Take it easy.